Well, clearly the markets are volatile at the moment, but when you look long term, I think that being invested through the market cycle is likely to give a good outcome. When we look at past downturns, it's clear that downturns, whilst they can be severe, can also last for actually a relatively short period of time. It might feel painful at the time, but the subsequent recoveries can also be much stronger and longer duration as well. And so from that point of view, adopting a long-term stance, staying invested in the market, can certainly yield great outcomes over the coming periods. I'd also note that when there's volatility, often market leadership in the coming years will change. And so as an active research-based manager, we can find lots of opportunities in a downturn such as this to make new investments that can help drive results over the coming years. And so with that market leadership change that we've seen in the past, potentially also coming in the future, we feel confident that we can find interesting investment ideas despite the volatility. So staying invested, I think, is the most important aspect of the current market environment. Well, I mean, in the current period, in the coming 6 months, clearly increasing interest rates and increasing inflation are going to be on investors' minds. And so when we look for new investments in this type of market environment, we're looking for 3 characteristics really to help drive results going forward. The first one would be the company's ability to pass on costs. So with costs increasing, we want to see companies that can increase the prices of their goods to recoup rising raw material prices. And so this might include some of the luxury goods companies, for example, with their strong brands. It can also include those companies that are playing an essential role within their own industries in terms of supplying goods and services, and so can't be removed from the value chain. They should be able to increase their prices as well. And so these characteristics help to defend the margins of those companies in the current market environment. So we're also looking for strong cash flows. Clear and present cash flows are very important in a volatile market environment. They give investors confidence in terms of a company's ability to fund their dividends and grow their dividends over time. And so cash flows and high and recurring cash flows are very attractive. And we see recurring cash flows in some of the industries that have recurring revenues as being very attractive as well. And I think finally, the thing to really focus on is valuation as well. Lower valuations are attractive in a volatile market environment. We're looking for valuations from companies and sectors that are at or below the market averages to give us a degree of safety in terms of undertaking those investments. And so when I look at the healthcare sector, for example, we see companies within that sector that have a really attractive combination of lower valuations and strong growth prospects going forward as well. And so when you look for those 3 things, that should hopefully underpin a strong investment stance for the coming longer term period.